A single decision, made quietly by leaders across the world, might be reshaping the global financial order right now, and almost nobody is paying attention. What if I told you that the most powerful nations outside the West are slowly abandoning U.S. debt, distancing themselves from the dollar, and instead hoarding massive amounts of gold like medieval kings preparing for an uncertain future? What if I told you that this shift, unfolding silently, could be the early signal of the greatest financial transformation in modern history? This isn't speculation, and it isn't a conspiracy. It's happening, step by step, and the impact could be enormous. To understand why BRICS nations are dumping U.S. debt and buying gold, we must step back into the era when the dollar was not just a currency, but a symbol of global stability. After World War II, the United States emerged as the world's economic giant. Its economy was strong, its military unmatched, and its financial system considered the safest on Earth. Nations everywhere lined up to buy U.S. Treasury bonds, believing these pieces of paper were as trustworthy as gold itself. Holding American debt was like having insurance. It kept currencies stable, allowed trade to flow smoothly, and signaled financial strength. For decades, this system worked almost flawlessly. But as history has shown repeatedly, no empire stays unchallenged forever. Over the years, signs of fragility emerged within the American financial system. Debt levels rose, deficits ballooned, political divisions deepened. Global crises exposed weaknesses that many hoped were temporary, but the world was watching carefully, especially nations that had felt the pressure of relying too heavily on the American lead system. The financial crisis of 2008 was the first major wake-up call. It revealed that even the most dominant economy on Earth was vulnerable. It rattled governments worldwide and planted a question in their minds. What if the U.S. dollar isn't as invincible as we thought? As years passed, the U.S. national debt kept climbing, reaching historic levels. Political conflicts triggered government shutdowns. Interest rates swung dramatically. Inflation surged unexpectedly. And countries that depended on U.S. debt for stability began to feel uneasy. The more volatile the U.S. became, the more these nations questioned whether tying their future to American Treasury bonds was wise. These concerns weren't loud or dramatic. They were discussed quietly in boardrooms, central banks, and diplomatic meetings, but their impact was growing. Meanwhile, a different group of nations was rising fast. Brazil, Russia, India, China, and South Africa. Together, they formed BRICS, a coalition united not by geography, but by ambition. These countries were growing economically, expanding their influence, and seeking greater independence from Western financial systems. And they shared a common frustration. The global financial order was heavily tilted in favor of the West, especially the United States. BRICS wanted a world where they had more control, more voice, and more sovereignty. This desire created a perfect storm, with growing distrust in U.S. financial management and rising confidence among emerging economies. BRICS began reconsidering their reserve strategies. Instead of relying on American debt, they looked toward something older, more stable, and unshakable: gold. And thus began one of the most significant financial shifts of our time. BRICS countries slowly started reducing their holdings of U.S. treasuries, not in dramatic, market-shocking moves, but in careful, strategic steps. Simultaneously, they began accumulating gold, thousands of tons of it. Silent purchases, hidden storage, quiet hoarding. Why gold? The answer is timeless. Gold has no counterparty risk. It cannot be printed. It cannot default. It is immune to political fights, interest rate changes, or sanctions. In moments of global uncertainty, gold becomes the ultimate form of trust. For BRICS nations, gold wasn't just an asset, it was protection. It was leverage. It was freedom from Western financial dominance. Gold allowed them to build a foundation that no foreign government could control. And unlike U.S. debt, gold's value didn't depend on political decisions in Washington. As BRICS began accumulating gold, the global financial atmosphere shifted. U.S. debt demand weakened slightly, causing yields to rise. When yields rise, the U.S. must pay more to borrow money. That means higher interest rates, more financial pressure, and rising costs across the economy. Investors around the world took notice. Hedge funds, banks, and pension funds began asking, are we witnessing the start of a long decline in global dependence on the US dollar? Meanwhile, BRICS countries gained a stronger position. Their balance sheets became safer, less vulnerable to swings in US monetary policy. Their gold reserves became a fortress, protecting them from global financial storms. This wasn't a sudden revolution. It was a slow, strategic, and calculated shift, one that could be even more powerful than loud political announcements. And it was rooted in something deeper than economics. Lessons from the past. Many BRICS nations have experienced financial crises, currency collapses, IMF interventions, and periods of economic instability. For them, vulnerability to Western financial systems wasn't theoretical, it was lived experience. Relying heavily on US debt made their economies dependent on decisions made thousands of miles away. But holding gold meant holding the keys to their own destiny. It meant independence. It meant sovereignty. It meant an insurance policy that had survived thousands of years of economic history. Imagine a central bank governor in a BRICS nation. He remembers the trauma of past crisis, currency crashes, market panics, emergency loans from foreign powers. He doesn't want his country trapped in that cycle again. When he shifts reserves from US debt to gold, he's not just making a financial move. He's making a statement. My nation will not be beholden to another's debt. My nation will own real value. My nation will not repeat history's mistakes. These are not just numbers on a spreadsheet. These are decisions that shape the future of entire populations. So why should you care about this shift? Because the consequences reach beyond government votes. They affect everyday people around the world. When major nations buy less US debt, American interest rates rise. When interest rates rise, borrowing becomes more expensive. Mortgage rates increase. Car loans rise. Business financing becomes harder. Government spending grows more costly, and global markets become more volatile. The financial world is interconnected, and shifts in global demand for US debt ripple across economies worldwide. Beyond economics, this transition signals a larger geopolitical realignment. Countries are beginning to trade with each other in their own currencies. Some BRICS nations are exploring gold-backed settlement systems. Others are forming trade alliances bypassing the US dollar entirely. This could reshape global commerce, energy markets, and even military alliances. The world may be slowly shifting toward a future with multiple reserve currencies, not just one. A future where gold plays a bigger role than it has in decades. But make no mistake, this is not the end of the dollar. The US remains powerful, innovative, and influential. The American economy is still massive and dynamic, but the era of unquestioned dollar dominance may be fading. We are witnessing the rise of a more multipolar financial world, one where trust is divided, power is shared, and gold enchant, silent, and incorruptible returns to center stage. History has seen this before. Empires rise, dominate, then face challengers. Currencies follow similar arcs. The Spanish silver dollar once ruled global trade. The British pound dominated the 19th century. The US dollar has led since the mid-20th century. And now, the world may be entering a new chapter, one influenced by emerging powers, alternative currencies, and massive gold reserves. The big question is simple. What happens next? One scenario is that more nations join BRICS or follow their strategy, accelerating demand for gold and reducing reliance on US debt. Another scenario is a dual system world, one based on Western paper finance, the other on hard asset finance. A third scenario is a hybrid system where the dollar remains dominant, but gold plays a larger and more strategic role. No matter which path emerges, one thing is clear. The rules of global finance are changing. The unstoppable rise of gold is not just a trend, it's a response. A response to uncertainty. A response to mistrust. A response to centuries of financial evil. And for BRICS nations, it is a declaration of independence. A shift toward a future where their economic security is built on something tangible, not on promises written on paper. So we return to the same question that opened this story. Why are BRICS dumping US debt and buying gold? Because they see what many others do not. They sense vulnerability in the system. They want control over their own destinies. They want shields against crises. And they believe gold, not dollars, not bonds, offers the ultimate protection. And this leads us to one final thought. In 10 or 20 years, the world may look back at this moment and realize it was the turning point. The moment when the global financial order quietly shifted. The moment when paper promises began losing their power. The moment when gold reclaimed its ancient crown. The only question now is, in a world where nations are choosing between paper and something real, which side will you be on?